are a full-service chartered accounting firm specializing in Canadian and U.S. income tax. The founding partners of the firm are Conrad Yen and Lack Multani, who are both chartered accountants. Conrad, Lack, and myself have a combined 40+ years of income tax experience between us. Both of our partners previously worked at several of the world's largest accounting firms, and I worked for the largest mid-sized firm in Vancouver for over 6 years. This translates into a wealth, training, experience, and technical knowledge that allows us to provide our clients with exceptional income tax planning and compliance services. Our professional staff at Arcling students are some of the best I've ever worked with. One of them has been with the firm for over 4 years, so there's very little turnover, which means jobs are being done efficiently and effectively by someone who really knows the client. Most firms have very high turnover, which means you're dealing with a different person every year, which is very frustrating for a lot of our clients. Strategex Group has developed a name and reputation in the local marketplace for excellence in the area of U.S. income tax. There's several other accounting firms that use us exclusively for all of their clients' U.S. income tax needs. So U.S. and cross-border tax is our main specialty. U.S. citizens living in Canada, Canadians working in the U.S. I won't spend a lot of time talking about U.S. tax unless there's anyone here that would benefit from that. Any U.S. citizens in the room? Was that a maybe? Oh, okay. So I won't get into great detail about U.S. tax, but we do specialize in that area. We don't just dabble in it. It's to go up against the IRS, you really need to know your stuff. So we have clients of all shapes and sizes, from the small order managed business to multi-million-dollar companies in every industry. Doctors, dentists, chiropractors, physiotherapists, other health practitioners, lawyers, notaries. We even have a couple of accountants, which I find quite funny. Realtors, mortgage brokers. We even have an Australian mining consulting company in Australia. One industry that we do actually specialize in is the film industry. Actors, stunt performers, writers, directors, producers. A good number of local TV shows filmed in Vancouver are our clients. We provide exceptional one-on-one service and creative solutions specific to each client's individual needs. Our experience allows us to perform tax planning efficiently and effectively. Having 2 other professional accountants to bounce ideas off of and brainstorm with before client meetings is very beneficial, something that I would not have as a sole practitioner just working by myself. We have the experience of a big firm at small firm prices. No, we're not as cheap as, say, H&R Block would be, or your friendly local sole practitioner in Langley, but we definitely provide service that's far superior to those types of accounts. So the way we see it is a good accountant shouldn't actually cost you money, it should save you money. Income tax planning is probably my favorite part of being an accountant. I'll give you an example of what I'm working on today. Now that April 30th is gone, I can actually do some fun stuff. A software developer. A client of ours just found us on Google. He Googled US tax and found us. He's actually been bought out by Microsoft for $2 million. So he's got this software he developed with a cost of 0, and he's getting $2 million, which means big capital gain in his firm. We're able to reduce his tax rate from about 40% on that capital gain down to about 23%, which saved him about $253,000. So just give you an idea of the scope of the numbers there. And what else sets us apart? Not only do we look at opportunities to save you tax, but believe it or not, we actually look for ways to decrease our fees. We recently dealt with a client's banker who wanted a full-blown audit. The client was quite a large company, about $11 million in sales, and they had a decent-sized loan with their bank. So we got on the phone with the bank and talked to them down from a full-blown audit to a smaller review engagement with selected audit procedures. So this knocked our fees down from about 25 to 30 grand for an audit to about 12 to 15 for a review engagement. So that one phone call saved our client about 13 grand in our fees, which is not something most accountants or most lawyers or most professionals are trying to do. They're not trying to lower their fees, they're trying to increase their fees. So that, I think, is what also sets us apart. Riderships, probably what a lot of you are in this room. It's simple, it's cost effective, it's great for the first couple of years of your business, especially if you have losses. You can deduct those losses against your other income, other employment income for that year, investment income, losses that would otherwise be trapped in a corporation if you had incorporated at the start. The next one is partnerships. Partnerships have their place, but ideally they're not the best type of business in most cases. Corporations is the third one. Mostly that's what we deal with. A lot of benefits, a lot of advantages to incorporating. The main reason why a lot of people incorporate is for liability reasons. A corporation is a separate legal entity. If someone slips and falls in your store, or one of your staff spills hot wax on a client and burns them, or if someone installs faulty wiring in a house and all the neighbors' houses burn down, if you're a proprietorship, they can sue the pants off you. They can go after your personal assets, your car, your house, your other businesses, everything. If you are incorporated, they can only sue the corporation about the corporation's assets. They can't touch anything you own personally. So that's a huge one. That's why a lot of companies like to incorporate. The only thing worse than being in a partnership liability-wise is being in a partnership where you're joint and severally liable for the actions of your partner. So that's something that people are often afraid of. So you need to know who you're going to business with, for one thing. There's a lot of tax benefits to incorporating as well. There's a low corporate tax rate of 13.5% versus 43.7% personal tax rate, highest personal tax rate. Income splitting is another big one. The opportunity to split income with your spouse or kids are over 18. So if your spouse is either earning very little income, staying at home raising kids, doesn't have any income, you can actually split income with them if they are shareholders of your company. To give you some sense of numbers, a high income earner at the highest personal tax rate, if you pay your spouse or kids $32,000 of dividends, the kid will pay no tax on that. Your spouse will pay no tax on that. So that saves about $17,000 in 1 year. So if you've got 2 kids, you're saving $34,000 just by having your child or your spouse own shares in your company. Non-voting shares, of course. You don't want your spouse or your kids to be controlling your company. Another one is a capital gains exemption. If you're a small business corp and your business grows and is worth something and you sell it, you actually have to pay tax on that gain. So for the most part, you issue shares to yourself for $1 when you first incorporate. You sell that company, 10, 20 years later for, 30, 40, $500,000, whatever. You're paying tax on the entire gain. Sorry, if you're a proprietorship, you're paying tax on that entire gain. If you're incorporated, you don't pay any tax. There's a small business limit exemption there. So another reason why, if you have that actual tangible business, where it's not just you as your business, it's an actual business with assets, it's got value, you definitely want to look into incorporating. Also with image and credibility, incorporated businesses tend to have a better image sometimes. People don't like dealing with partnerships, they rather deal with corporations. Other things you can do with corps, just holding companies, family trusts, ITPs, EPSBs. I can throw letters at you forever, but a lot of applications to use when you have a corporation. Some of the things that we're dealing with lately, everyone's favorite, CRA, income tax audits, and GST audits. That's something that we've been dealing with clients that aren't even our own clients. Clients being audited, or they know who's being audited. We deal with the CRA auditor from start to finish. We wrote that for the client. They might get reassessed for unreported income, things like that. We can negotiate with the auditor and get that number down. We recently had a client who was reassessed for about $500,000. Dry cleaning business, cash, wasn't reporting his income. We actually got that assessment down to $70,000 with no penalty and reduced interest. So you definitely need an experienced accountant on your side to do that kind of work. You definitely can't negotiate by yourself with CRA to that extent. Good question. If there is an opportunity to income split, that's perfect with a spouse, kids that are over 18. If generally they're not spending every dime they're making, if they can leave $50,000 in the corp, revenue, you're not spending all the money that you're making, that's ideal. For someone who's earning $30,000 a year, pulling all that money out, probably not beneficial. There is a cost to a corporation. You have to do the incorporation with a lawyer, annual financial statements, so there is a cost to it. So it's generally beneficial if they're at a certain income level.
So would you say $100,000 is still?
Again, it depends if you can split income or not. If it's just yourself, that number is a bit lower. Yeah, it depends. You don't have to. It's ideal because then you can get the proper share structure set up. The lawyer deals with the accountant to get the type of shares you need, the number of shares, different preferences and rights to them. You can actually do it online. Visit the UC online website.